What is happening, guys? Let me know if you can hear me. I think you can. Should be good, right? I love it. All right, we got a couple people hopping in. Morning. Got a handful of live trades going on. Tesla is currently selling off like crazy. SPY's going straight to the side and all kinds of other stuff. So I'm just gonna check up on a couple things really quick. Sorry. We got a new camera, by the way. I don't know if I know how I feel about it yet. Guys, let me know. But what Uzi, you have a Uzi is actually love you, dude. You're welcome to hop in whenever you want, for sure. But anyways, yeah. So give it a second, guys. If you haven't subscribed to the YouTube channel, go ahead and do that. It's just Paper Gains at YouTube. Link above. This thing is flashing like crazy. papergains.com/links. If you haven't checked that out, by the way, there is something super cool. And we have a couple different affiliates. But if you guys didn't know, check this out. papergains.com/links. Look at this. 60% off Seeking Alpha. That is like an absolutely epic deal right there. And that is actually pretty new to the setup. So kind of excited about that. It's official. All right. And if you don't on Twitter, I know this is streaming on Twitter. I don't have a whole lot. It's kind of a funky one to watch there. Quality is super low. So if you are, cool, retweet it, what have you, that'd be amazing. And again, if you want a little bit better quality, always happens to be a little bit nicer on YouTube. Again, if you're in the servers, just ping it. We're in about like 50, 60 servers, something like that. I don't know. And I think Xcolor said he might be hopping in. I'll ping him really quick. If not, no big deal. And I'll just ping the rest of the analysts. Analysts meaning like our traders. Yeah. Cool. All right. So before we get started, just gonna hop into this really quick. Carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. Options, market data, and all of that good stuff are subject to change at any time. I'm supposed to read that. Sorry, guys. It's just a thing. Nice jacket. Oh yeah. I don't know. This is super old, man. It's getting cold outside, so it's winter time for sure. Right. Appreciate that. And cool. Aisha, you rock. Very cool. I'm gonna see if I can turn this little flashy banner thing off. There you go. Here. All right. We'll just put it steady at the top. All right, guys. So as we go, oh my goodness, I see one of our guys hopping in. I don't know if he's actually going to show up. I'll let him decide if his camera pops on. We'll bring him in. Anyways, so just moving forward, he got scared off. Too funny. What I like to do is just kind of do like a quick recap. Not a whole lot of stuff going on. We did have that PPI data last week, so we'll take a look at that for sure. A handful of things about the banking stocks. Goldman Sachs warning of job cuts coming in. Morgan Stanley saying they're going to cut about 2,000 jobs, and B of A slowing down their hiring. So just a heads up, banks have had a bit of a rally actually in the last few weeks. And I think last week, let's see if I can pull this up. Last week did not look good for them at all. So what I would say though right now is that we really want to be kind of cautious about what's going on in general. Actually, you're not looking too bad. Because our biggest days are coming Wednesday, Thursday, I believe it is. Yeah. So, well, actually, no, Tuesday, Wednesday. My bad. So tomorrow morning, we're going to get some pretty epic data, and we'll get into that in a second. But all I can say, and I want to hit this out of the gate, is that this week is going to determine for sure the rest of the entire year, and very, very, very likely the entire first month or two of 2023. So yeah, Boyle's running for sure. Yes, Boomski, what's up, Nick? And just taking inflation. Yeah, Yellen did have a comment this morning. I don't know. Like what I'd say is like, look, if Yellen and Powell, like their track record on estimating inflation is really not that good. So that's all I could say. Like if we took our trades based on their logic, we'd be in a ton of trouble. So what I'd say is like, here's the interest rate projections, right? So year one, I think that's like next year. This rate right here, this is terminal rates. So terminal rates, just so you guys know, that is actually like, what is the rate that the Fed funds rate that the Fed is trying to target? What are we going to get to? So we're just around 4 right now, give or take. And if we're looking for like multiple 75 basis point hikes or multiple 25, 50% basis point hikes, just know, hey, what is the terminal rate that we're trying to get to? And at this point, we want to know where we are. So we're about 4%, give or take, I believe. Don't quote me on that. I could be wrong. We could take a look later. But yeah, I mean, there's not a whole lot coming. And so this is what the market is kind of expecting for next year and the year after. Good thing to know, oil kind of took a bit of a nosedive, actually hitting around $70 a barrel. I haven't seen, 73 right now. Last week, we hit 70. And just so you guys know, I did have that like sub 70. It was 67.50 kind of target on crude. The US, remember, we were tapping into the strategic petroleum reserves, and we've depleted literally half of those so far. So the Fed, we're actually not the Fed, the government is probably, I think it's Biden, probably a bit of a better trader than the rest at this point, selling a little bit higher, now looking to be filling that reserve around $70. So more likely than not, that's going to be a choppy, probably trendless trade. Might look like it's going to dump, and then it'll all of a sudden you'll see the government hop in and just gobble it right back up. So, that's kind of what I'm seeing right now, and what I would expect for probably the rest of the year. Unfortunately, there was a CNBC survey this morning that I took a look at. Kind of interesting. What is the survey was like? What is the market expecting right now? And we'll take a look at this. We see it in the CBOE Fed Watch tool all the time, but the survey was basically look. 75 basis points of, throughout 2023, 50 basis points for Wednesday, and 61% of people that they surveyed are believing that a recession is coming. And I think this is really the biggest fears. Like, is there actually going to be a recession? And what does that even look like? I don't know, that, hard landing, soft landing. The biggest thing that, we started talking about this probably like, I almost want to say a year ago now. But God, I'm not going to go there. Stagflation, it's a thing. It's going to be a thing. And now a lot of people are talking about that. That's probably the worst case scenario. So hopefully we don't get there. But right now, that is kind of what we're looking at. I'm just going to move this forward. So a couple key data points to highlight. Last week, we didn't really have a whole lot, but it was PPI on Friday was going to be the biggest day, which it was. And Wednesday, we got labor costs, right? So anything to do with consumer or with labor costs is going to be a big deal moving forward. And a lot of the discussion is really just going to turn into like earnings, peak earnings, and what does that look like for the rest of the market? So if you believe as a market participant or investor that, that the earnings estimates have to come down, then you believe the market's going to come down probably to that 345 or lower, right? Contrarian view. What is he saying? Everyone is saying a contrarian view. Everyone's saying coming in hot. Did they say that? Yeah, I don't know. So here's the thing. Labor costs, for whatever they came in low, right? This is Q3 unit labor costs. So that's not horrible. That's actually fairly good for earnings, right? Consumer credit change, it was below expectation. And so I put this up here this time because I do believe that consumer credit, that's going to become a topic later on in the future. If this whole recession thing is going to play out, where it's going to come from is from consumer credit. Video blurry, I don't know. If it is, just let me know and then we can adjust it later. But, if there's credit defaults and things like that, people are writing up credit cards, and that's a big deal. Well, that's where the recession is going to come from. So that's why I want to put it on the radar right now. Previous 25.82 billion, 27 is where we came in, a little bit lower than expectations. Probably didn't move the market a whole lot. Not a big deal. Continuing claims. This is a little funky. So new job claims and things like that. This is people applying for unemployment insurance slowly, and I mean very slowly, ticking up just ever so slightly. So 226, 230. This has been about the average. If we get to that 250 kind of level, that's when all those, like recession issues, things like that are going to probably start popping up again. And the market will probably take a downturn. PPI, this is the one that I was really interested in coming into last week. And so the consensus was 0.2. We came in 0.1%, just slightly higher. Not a big deal. The biggest one here was really the core number. And so the Fed's going to look at, it doesn't really look at PPI that much, but what the market's going to look at is really the core number. And that does not include food and energy. It does include rent. So when Michael was on last week, so he's right. So it does, core does include rent, does not include food and energy. So that's really the biggest thing. That was a big miss. But what's funny is that the last report came in flat. And also it's kind of going up and down. If we see some major changes in PPI that are significantly higher multiple times in a row, then that's going to be a big deal. So the next PPI is going to be kind of revised previous PPI. I think they revised it significantly. I don't remember what it was. Consumer sentiment, again, 59.1, not a big deal. So moving on, right? We do take a look at this Fed Watch tool, and I believe this bottom one here that I wanted to look at. This was last week, right? And so the market was expecting, 25 basis points, 50 basis points. There was even some 40%, 75 basis points. This is like fear priced in, something crazy. But this is today right here. And these were both for February. So what's changed? So this 450 to 475 basis point gone up from like 10% to 40%. This is 25 basis points. That's, okay. 50 basis point kind of stayed the same, but all this shenanigans about a 75 basis point hike is essentially gone from 40% probability to markets only pricing in 10%. So I think that's actually about right. But I digress. And we can kind of, here, let me see if I can pull this up. There you go. Let me see if I can zoom it just a little bit for you. Cool. So this is where we are. So for December, right, we're pretty much 75% probability right here, which I think is accurate, and very small, 20, I believe that's 75 basis point hike being priced in. Yeah, we're just about 4, so that would be 475. 50 to 75 basis points, 25 to 50 basis points is 75% probability. But again, February, this is where I'm really looking, and then also more into March, etc. So I don't think that the rate hike this week is really going to be a big deal. It's probably going to come back right to that speech one more time, and the market really intently listening on what he says. But I think that the actual rate hike is probably priced in. So I'm just going to go into this week really quick. And so today, really don't have much coming in. And I'm just going to do it this way because it's just so much faster. The times on the left here, guys, by the way, I'm in California, so this is Pacific Standard Time on the left, so please adjust to yours. And we're going to take a look at the consensus numbers, right? So actual and previous numbers don't, consensus or forecast. Previous numbers don't really mean a whole lot, right? What really moves the market is what comes in that's different than consensus. So tomorrow, and I love how they do this. So tomorrow we get CPI, right? And I'm going to just change this to see if this looks any different. Yeah, so the year over year number, I mean, we know it's high. I'm really not paying a whole lot of attention to the year over year stuff. It's really going to be about the month over month number. And to me, I kind of want to look at this core number a little bit more right now. The Fed's main gauge is PCE, actually the deflator. CPI is like their second. So it is important, but PCE is more important. So again, this core number does not include food and energy. What they call a headline, where it doesn't say the word core in front of it, that does include everything. So of course it's going to be a little bit higher just because of, gas and things like that. So we're going to get a little relief for sure on the headline. So that's why I want to look at the core a little bit. So right now consensus is 0.3%. So if that really comes in at like 0.5% or 0.5%, that's going to be really bad. And most likely, here's why I say this is going to be the most important freight for the rest of the year and probably the next month and a half, maybe 2 months. If you're an investor or you're a trader or a big dollar trader, think about it. You're about to go on vacation. If you think about like what happens in Thanksgiving, everybody goes off, volume dries up. It's about to dry up. It's going to dry up probably this week or next. Do you want to be invested, fully positioned while you go on vacation and you're not really looking at the market? If this number comes in hot, probably not. You really kind of don't. And so the thing is, Santa Claus rally, I think a lot of that really happened already. If you scroll back on our YouTube a few weeks ago, probably 3 or 4 weeks ago, I said, I kind of want to be out before Christmas Eve. Anyways, right? Technically, the Santa Claus rally is supposed to be the last 5 days of the year, but I don't know, right? I don't need to be in that very last piece of it. I may be trading, we'll see. But just the same, for the most part, this is kind of, you're entering into that risk off. So unless it's like really good news, I don't know that it's going to just be like a super pump. But tomorrow and Wednesday, that's going to be the 2 days of the week that are really going to determine what happens for the rest of the Santa Claus rally. If this comes in hot, you guys, it's just going to be risk off for all the major players. And I really, really don't want to be, playing a whole lot there. Yeah, Tommy says Santa Claus rally was already priced in. Yeah, I think it kind of was, right? This last few weeks when we first started talking about it, right? Buy Rosh Hashanah, sell Yom Kippur. That's when it really started. And look, that was a great trade. It really, really was. So no complaints there. So that said, I think, we're going to get the headline numbers and the core numbers for CPI Tuesday morning. This is pre-market. So actually at market open. And then Wednesday, we get the actual rate decision. So the rate decision is when, the notes come out, and there's going to be a couple different moves. So if you guys don't remember, and if you're not familiar with trading FOMC days, a couple things happen. So initially around, this is 12 p.m. Pacific, so 3 p.m. Eastern. It's probably going to be around 11:30, 11:50 or 11:45, something like that, about 15 minutes before this actual rate decision happens. All the press, outlets, they actually get a pre-release of the notes and what he's going to say. So you'll see an initial market move really quickly. That's just kind of like a blip on the radar. Sometimes it's big, sometimes it's not. But what's true is it's not ever the first real move. So be kind of like hedged for this day. And then you actually get, projections, that's all this stuff. And you get the actual interest rate, right? So you get current 4.4. Let me see if this is not clickable. Let me see if I can zoom into this. Yeah, so here we are. October. We got a 75 basis point hike. This looks like not the greatest data here. It's the 2-year really that we're going to be looking at. I'm just going to go back over here. Thursday. So we get the interest rate decision, right? That actually comes in. Oh yeah. And this is market's kind of pricing in a little bit higher right now, short term. And then 30 minutes after that, that's when the real fireworks start to happen. So 12 o'clock, the actual rates come out. This is what's going to happen. And then 12:30, I don't think there's going to be any surprise here, by the way. 30 minutes after the rates come out, that's when the fireworks happen. You can watch. This is a very tradable event. Really, there's going to be something that he says, no matter what. I mean, it's every time. Like, it's not right away when he starts talking, but you'll see, like, he'll say something, and the algorithms just pick up on it, and the market starts flying, right? This is kind of like midway to a quarter of the way through his speech, right? It's the first one. It'll probably retest that, and then you get this big old follow through right after that. And that follow through after, during the press conference usually lasts about 36 hours at most, right? So that's what's true. This one may be a little bit different. I'm really not sure what to expect on this one. Hopefully it's not a complete dud. I mean, that's also possible, but this one for sure is going to set the tone for the rest of the year, right? And you'll really see how that is going to play out throughout the rest of the 2 trading days. So you'll have Thursday where we get not a whole lot of data. We do get retail sales, that's kind of like whatever. And then a little bit more, jobless claims, job data. We'll see continuing claims again. And do we really get a whole lot? No. So that's really it. So whatever's going to happen is going to happen on Wednesday. Tuesday, it might happen a lot of it on Tuesday morning. So Tuesday will be a big day tomorrow. I think today is likely just going to be a sideways day, which I don't know. I got to see it looks fairly sideways to me. And everybody's just really kind of like in a holding pattern waiting for tomorrow. So tomorrow you get the speculation move. Wednesday, you get the actual move. And then Thursday, Friday, we get the digestion. So be light today for sure. Don't expect that anything that you see happening today is going to follow through for the rest of the week, because everything will change tomorrow and Wednesday. All right. So that's what I got for that. And I think I'm just going to do this really quick. So a couple things. Last week we noted the VIX, right? So the VIX, and I'm just going to move these to a 30-minute chart. So the VIX is kind of a gauge again. So when the VIX is around 20, that's a good, typically for a choppy continuation to the upside for the most part. What happens though is that, we'll bounce around. So if it comes back under, my chart is kind of, so I'm going to reload this. Okay, there you go. So if we can get back under 22, I think it was like 22.50, 22 and a quarter. Wow. Internet. Way to fail me right now. Here it is, right? So this is about 22. I'm going to say this 200 week, 22.20. Yeah, 20, just call it 22. If the VIX gets back under 22, or it's kind of basing right here, this purple line is the 200 week moving average, by the way. If we can get back below that, that's going to be a pretty solid sign that, hey, look, we are going to carry on to the upside. And most likely it's going to be a pretty big follow through to like 410 plus, give or take. And then the dollar, right? So DXY is the chart that follows the dollar index. I think this is now in a kind of a basing period. So as long as it's below that 105.50 level, we're going to call it right here. This, I don't think is going to fall off a cliff, but I think that this could probably chop in a given range more or less. But it's had a pretty huge downside move, really. I mean, that's a big old 114 to 105. I think it needs a little breather, but this will likely move after all the CPI data comes out and we get this FOMC rate decision for sure. But it doesn't look like it's going any higher. If it does, yeah, I think that tomorrow, what's going to be funny is like tomorrow and Wednesday, if we get this, if we get bad CPI data, we could get a situation where rates rally and the stock market falls off a cliff, which is really not typical. So normally, if bonds are going down, right? If rates are going down, then was it rally? I think both could sell off. Like rates would go up or rates would go down. Yeah. Wow. Brain fart right now. rates down. XCal, what's up, man? Yeah. Click the link if you want to hop in. Rates down. If there's bad CPI. Am I getting this right? Holy crap. Anyways, I'm thinking both could sell off, bonds and the stock market. Holy crap. My watch is there. Maybe I need more coffee. I don't know. But anyways, we could get a really funky situation. We've seen a lot of things that were tracking like very clean, like the dollar to stocks. Like this is kind of decoupled, like that whole, they were so tied together, like the dollar would go down and stocks would immediately go up. I think that kind of trend has started to decouple. And I think VIX is at a level where we really can see some kind of directional move. And again, I'm looking at VIX, the VIX futures, specifically not VXX, specifically not UVXY or any of those leverage ETFs, anything like that. Don't chart those. Those are not really chartable. I laugh every time I see people doing that, but they're only daily leverage tickers. So here we go. So I'm going to do really quick. So right now, this orange box, this is an average week's range for sure, for SPY and for everything that I have these on. I got a bunch of lines, so it's a little busy here. This blue line, that's actually an anchor view up to the COVID low, which is right at this 385 level, which is this prior consolidation. If we do get that kind of like pushed down, I think we could see a little bit below that actually. And I know a lot of people are targeting this right here. This is 375. There's a little fair value gap right here at 375 from that last, not the most recent. This right here is the most recent. I think it wasn't, let's see, CPI, something like that. And then we got a GDP. Where's my GDP stuff? We had GDP print somewhere here too. Oh, it might have been this one right here. Anyway, so this was the last fundamental event, really, that kind of changed the direction. And we've since like given all of that back and then some. So I'm going to move this line down, and you can kind of see, this is a 30-minute chart. You can kind of see very clear bottom end of this value area. I'm just going to tag this. If I zoom in really tight, I think at 392 right here. Yeah, about 392. So this is where they last stepped in, and this is probably the bottom of our value area, current value area. And then this 390, that's definitely a support level over there. Kind of tagged multiple times. So value area down here, but there is a upside of value. So we have this 396. If the market likes what he has to say on Wednesday and the way the data comes back out, all of this move, we're right back to the upside again. So right now, in between these two kind of levels, to me, this is our chop zone. And more likely than not, I just see us kind of like chopping straight to the side today, and then we'll see what happens tomorrow. I'm backstage. Yeah, I can add you. Here, can you say something? Your audio should be on. Looks like your audio's on. I don't have your video though. Yeah, if you decide to hop in, have at it, brother. But this is kind of where I see this chop zone, right? If we do get above this, I really want to call it like 396, honestly. What's this right here? This level. VIX color gets on. He's a futures trader, so he's probably pretty intentional with his levels too. I'd say 396 personally, just to be safe. If we get above that and hold, I mean, that's going to be pretty bullish for sure. And then we could go straight back up to this. It's about 410, probably make a new high and probably get close to tagging this fair value gap, 417 target that I have. But that's all predicated on the guess or estimation that CPI data comes in cool and the market likes what it sees. TLT, I haven't seen TLT today, but yeah, I think that this TLT is the 20-year plus treasury bond, so this is inverse to the yield. So the long bonds basically have been going down in rates. So I think this trade is, I had a leverage ETF on this TMF, so I took that off Friday. We missed a little pop this morning, but hey, it's okay. It's a lower high for sure. I think this kind of goes sideways for a little bit till this is gonna be an FOMC trade, no question, right? That's definitely tradable for that FOMC event. TLT and all the shorter term ones that are the major movers. All right, so Q's right here. So Q's, same thing. So we have the same level. I'm going to take a quick line, and that's right where we're sitting at the moment, right here. So this is a fair value gap really from that Powell speech. This guy, though, levels are a little bit different. I think the low end of value, 280, and the high end is going to be over 285 to me. Above 285, this is that same kind of like, okay, that's a major fair value gap, but that's 311, way up there. This guy's probably going to be the most affected. Honestly, if I'm looking at the two as an investor, I think the Qs are a lot cheaper than something else still. Like, we were looking at the diamonds or industrials. These have had a pretty good run off this bottom. I mean, like the best run for sure. What is this move? I mean, from here, that's like 20% versus the Qs. What are the Qs? No, it's not even close to 20%. The Qs, it was like 12%. So like less than half that. IWM, I don't know. IWM, this is a redheaded stepchild of the bunch. Actually, it does kind of what it wants. Like it's really hard to get a good trade on this unless the other three are like completely lockstep with a clean trend. Otherwise, this guy doesn't have to follow the rest of them. It literally just kind of does what it wants. But right now, SPY, I think we go sideways. Want to throw some 0-day condors on? I'm sure that would be perfectly fine. A couple of charts I did want to take a look at really quick is gold futures, right? So this is GC, which measures gold futures. If you're in the servers, we had some gold trades on, some silver trades on, things like that. We're coming into this level, key level, right on this top. It's November 15th. So I want to see a solid close above this today. And I think this could still continue on, right? Whether or not, whatever happens is going to happen. But I don't think that the rate decision is really going to make a huge difference on this. The only thing that really, at a certain point, and we're not there yet, would really determine whether or not this has like significant legs or not is if the real rates change. And real rates, again, if you're not familiar, it's the current rate minus inflation. Right, so if inflation is 7.7, and then the bond yield, the current yields, minus inflation, like if we're at 4, even 4.5, 7.7 minus 4.5, that's like negative. It's still 3. You're still negative rates, right? Negative real rates. So even though, bond yields are going up compared to inflation, you're still losing money as an investor. So why be there, right? It's a very short term kind of myopic view when you're talking about these kind of situations, but you have to either believe that inflation is going to come down significantly, or rates are going to go up significantly, and when they meet that kind of like happy medium and finally come in and yields are higher than the actual inflation rate. I'm looking at some of my trades right now. If you guys are in that Boeing short, that thing's looking pretty good, without even looking at looks like about first profit target. So that said, if you guys want to take a look at some CL, right? I'm backstage. I see you, right? Excalibur, you can talk. You're upstage, actually. You're talking. Ooh. Can anybody hear Excalibur? I cannot. Nope. Yeah, something's wrong with your audio. Select your audio. Reselect your microphone. XCal. I put you up. You're a blank screen, but yeah, in the settings, go to your audio. Make sure you select the right microphone. Anyways, cool. So gold, it's not a trigger for sure. It's at support. It doesn't mean you want to take the trade. If you're in the current trade, I have a spread on, so I'm okay if it goes sideways. If it goes below, it was 1778 really. Right here was the level that I was looking at gold futures. Tag this. This was the trigger level. I don't really want to see it go below 1789. That would be a full close on gold futures. And we'll just check back in later, right? So on GLD, the ETF, that is about 165. Below 165, it's a cut. For now, it could likely, look at this, right? Here's what I'm looking at. If you want to look at this order block situation, if you like patterns, if you like trading, whatever, right? We're kind of looking at this potential, right? So if it can hold this level and it can actually bounce, this is what I'm really looking for. So today, yeah, it could come down a little bit. If you're not in the trade, you could probably take a quick shot and then for an overnight starter, and you'll know very quickly the following day if you're gonna, if it's gonna be one or not. The only thing I'd say is it's probably safe. Let's gamble, right? Just wait till the CPI comes out and see what happens. All right. So here, NEM, Sean wants to know NEM. All right, take a look at a couple. So NEM, I think is gonna follow the gold trade for the most part. Crude coming down, likely gonna be good. 15 second. We don't need 15 second. NEM is still okay, right? So here's really what I'm looking for, right? If you're very similar situation, again, mostly equity here, right? Below 45, if you're in options, that's a hard stop, but we're coming in to the top of this kind of consolidation area. It's very likely where we would see kind of a bounce, right? Could it pull back down just a little bit? Sure. This guy did just pay a dividend too, so that's going to be part of this price action. So as that gets pulled out of the stock value, then we'll kind of reclaim where we're going again. But really, if this is just one more higher low, I'm super happy, right? If this is your trend line, and no, I didn't use this big wick out, right? It's just this here, 1, 2, 3, kind of match up. This is exactly where you want to kind of be buying. So I'm not selling because I'm already positioned. Let's pull this back to 30. Yeah. I kind of like this level. Even if it chops around a little bit, that's fine. If you're an investor here, this is not a sell. This is still technically in accumulation zone. If you're not fully invested in equity, it's probably not a bad idea. Maybe sell some downside puts. Sell some like $44 puts, because this is the low end, right? It's not really a full close unless we're below 44. This guy. Below 44, sure. Could be a full close because we're going to add down in this level if we ever get to that. But right now, this is a value add right here. Right at this order block that we're coming in on. I like this level. Not sure if you're thinking long or short here, but it's not a bad one. This is similar to where gold is right now. So again, right in that kind of like value area. Big old order block right here. Kind of matched again one more time. I don't know if you see what I'm seeing. So order block, like we got a big old candle. They stepped in pretty much right on that same level. One more time. Loading, right? Loading. So 45.50. It's good support for right now. I like it, man. It's a nice one. All right, so a couple others. Let's see. I think, let's see, what's Dukin since he's on? You're like, why are you gonna pick on me? Netflix. Oh, I like this Netflix, right? So Netflix was short this morning. Look at that beautiful entry this guy had on Friday. All right, so supply way up at 330, right? Right now, top of this consolidation zone, you're well below it, right? Bottom of the consolidation, right into here, order block, boom, right here. Let's call it 305, and that matches up right into this prior double top. So 305 is a major level for your second short. For right now, yeah, he's probably short too. He's still probably short for a little bit. You got a little battle right now with Thursday's high or consolidation, but this is still kind of like that. Look at this. You're still below that 310. So below 310, it still looks like it's going down. Above it, yeah, you probably chop in this range, maybe fill this fairly up here. But if you get a shot to go short at 318, 319, and you see it failing, that's another good re-entry short. Be one more lower high. And this guy on the daily, yeah, you're coming into some serious. Look at this. So this was like gap filled, 329. Mission accomplished. Likely going to be in this very tight trading range, tighter trading range than it has been. Here. This is pretty clear. Clear trend. Yeah, that would bring it to just under 300, 297 on that downtrend. Yeah, so I could see it going down to 300. Easy. That's his target. GDXU. Getting cheeks clapped by Spot, but yeah, I don't know. GDXU. So GDXU is going to be right into that NEM GLD. I like it. I think I'm going to be on with Wolf this afternoon, way later, and I'm probably going to pick GDXU as my trade, honestly. One more time, just at this 41.86 level. I really like this. I've never traded options on this guy, but you know, I don't know that I want to really load on equity. My GDXU not coming up on my options. Oh, does it not have options? I don't think it does. All right. Probably no options on GDXU. So GDX, on the other hand, is tradable. And we have this right here. 1, 2, 3. Little pullback right into this. Here. Take this last one. Boom. Right here, right on top of that consolidation. I like this. GDX, very liquid underline. $30 calls, 1,900 on 58,000 open interest going into today. Probably want to go, there it is, a little bit farther out. January 20th, 2023, 7,700 volume on 4,400 open interest for the 31 calls. Yeah. 40,000 calls versus 12,000 puts. You know what? You know, Sean, this is really bullish flow for the NEM trade, going long NEM. I'm just going to look at the biggest order blocks. June 16th, 2023, $25 calls, 600 single lot, one trader order at $550 a piece. Paying a little premium there, huh? All right. I like it. Yeah, I like those January ones. Jan 27th, single trader order, 385 lot at $211 of the January 27 calls. Jan monthly, 27 calls. Those are just like at the slightly in the money now. Looks like they're doing a 27.31 call debit spread. That's $4 wide. For about 171 here. I actually really like this. So buying Jan 27th, selling Jan 31. Looks like about 7,000, give or take, lot. $4 wide, trading for $1.71. This is pretty safe. I'd say safe. minus 171. So risking 170 to make 220, 230. I think that's kind of like a slow roll, easy money, kind of a layup trade right there to me. If I look at that. The rest is some YOLOs, March 39s. Some serious YOLOs out there for sure. Let's take a look at silver. So silver's coming in similar, right? And you know what? If you're confused as to why I'm looking at precious metals right now, I just don't think that they're going to be as affected as the equities, right? So I feel like this would be a safer one. I think Dixie is definitely not going up regardless of what happens. And if you're long or short equity, if you're short equity, you're probably going to be safe haven. That's going to be precious metals. And if equity goes up, precious metals are still a decent value here. So I like it to the long side in either case. Let me see SLB. And I'll get to Google, and then I see your request, and then we will be done. So SLV, 250s for Jan. 72,000 calls and 30,000 puts. Again, very, very bullish flow here. Mostly selling short-dated upside premiums, selling 2350s, pennies. Looks like, yeah, these are all small-time bets. Jan 6th, a single trader lot, buying Jan 6th. Oh, this is diagonal. Buying January 6th, 2023, $23 calls, 1,000 lot at 25 cents a piece. And it looks like they're selling these 16ths, 2350s. So that's a little diagonal. I don't know why you'd sell those, but anyways, yeah. 20, what was it? At 23 calls, 2350 calls. They say 2350? January 6th. Super weird date. Yeah, that is. Whoa. 6,000. That's a deep order book. Over 6,500 deep on both sides of that order book for that January 6th, 23 strike. I like the strike. All right. Marcus wants to take a look at Google. So, Marcus, you are up. Very cool. Joe, yes, the little spaces are great. No question. So, when I'm charting Google, I'm going to chart GOOGL. So, Goog, if I go back, I believe Google is preferred. GOOG is preferred shares, which aren't really as liquid. Just if you're a preferred shareholder, you're going to have voting rights. So you're probably not trading in and out of those as much. So $91. I was thinking, well, I have been long Amazon, short Google. I think still a good trade. Whenever Amazon's cheaper than Google, I tend to like Amazon. And I do have an Amazon debit spread still on. But Google's coming into a pretty interesting price range too. So I like Google at $90. I'll just tell you that for sure. So that's this second level, $90.32. Take a look at this order block right here. So this is post earnings, right? So you have an earnings fair value gap all the way up here. This is a fundamental event that's creating our technical level. This is a big deal, right? 104 is going to be massive, massive challenge to get above. Call it 103. So that's your upside target. It was just a slightly lower high not too long ago, and that proceeded to sell off precipitously. So right now we are coming into a pretty key level of support, right? So you're sitting on it right now, 91 and change. I wouldn't expect this to go just yet. If you're an investor here, it's not a bad dollar cost average spot, but my real DCA dollar cost average, if you're not familiar, is going to be right in here between 92 and this is really all the way down to 86. So this level right here, this is big time where the buyers most recently stepped in after that last bottoming situation. There you go. So right now, value adds right in here. between 90.42 and 87.60. I'd look for a bounce in that area. But for right now, just kind of let it do its thing. Unless you have a break of structure, meaning like you see a higher high above 93, then go for it. You're battling with this 200 week moving average, this purple line right here. It's a big deal. So it could have this quick flushes to the downside. Maybe have some, I don't know if I would say resting orders, but have some alerts set for sure. Because if it doesn't hold, yeah, 76 would be the low end, but none of this is going to happen unless we get some really funky data for CPI tomorrow. So again, just kind of like hang tight, watch these trades. These are key levels for sure. Value area loading zone on Google, if you do bounce, is going to be right around that $90, just about 90.63, give or take. This kind of comes all the way across. I like this level here. Yeah, man. Very cool. So not a bad investing place, but just remember, don't blow your load in one shot ever for investing. Make sure you have like cash available to reload. If this does happen to get you way down here, you'll want to be able to average down on this level for sure. But if it breaks, here's what I'm saying. If you're in it and you're trading below 86, get out of the way. Get out of the way. That's for sure. 86.31. That's hard stop. Top of this, bottom of that, right where we pierce through. You don't want to see anything lower than that. You're like, peace out. All right, guys. I think that's it for me. Pretty cool. Closing up just a couple minutes early. Appreciate all you guys. Again, check out that link on the top. If you're not following on Twitter, it's Paper Gains Inc. That's our handle. I think it's Instagram. We have it too. And definitely on the YouTube. So, all right, guys. Have a good Monday. Enjoy the rest of the week. And I will see you till the next one. Happy holidays.